But let's try and shift focus as to, Trump 2.0 and what would it really mean for the world. We've got Marco Papik, Chief Strategist at BCA Research, joining in on the show right now. Marco, thank you so much for your time and welcome to ET Now. Firstly, let's talk about Donald Trump. He takes charge next week. What do you expect from him? You think he's going to follow up on his pledges about tariffs, tax cuts, and immigration? What is your own sense? And do you think it was just perhaps rhetoric?
Macro investing is pretty difficult because not only do you have to get the direction of markets correctly, but also what is the most important issue that the market will focus on. The market can't focus on everything at the same time. And I think that too many investors are trying to combine all of Trump's policies and figure out their inflation, market, and economic impact. I think that the market is going to continue to focus, as it has been, on fiscal policy. That means how much will President Trump and his cabinet expand the budget deficit? And thus far, the market has assumed that the US will continue to spend at a pretty significant clip. In other words, fiscal policy will be very stimulative. And you can see that the bond market has reacted to that already with yields rising quite fast. And I think that that has had a negative impact on equities. My view is that President Trump will actually surprise investors and that he will have to limit some of his promises because of the bond market reaction. And that will mean less growth in the US and probably less outperformance of US assets relative to the rest of the world. That also means for a market like India, a pretty welcome respite in dollar strength, which will allow investors to start looking for global investors to start looking for opportunities in emerging markets. On tariffs, I think that President Trump will impose tariffs. It's just that there's so much uncertainty, it's not really worth us thinking about how much or where. But I do think that he has to surprise the markets and he will have to be quite firm early on because it's useful as a tool of negotiating to really be aggressive early and then be able to use that to negotiate with other countries in terms of policies that he wants them to abide by.
Taken, but I also wanted to understand from you as to what will happen to the federal debt in US because that's become a big talking point. It's getting very elevated, and there were reports in October that were talking about how Trump is planning to spend over almost $8 trillion. Do you think he really does have the ammunition to do that?
No, so that's my main forecast, honestly, for the next 6 months. I think I'm laser focused on this issue, and I would say that he will not be allowed to raise the deficit by more than $2-3 trillion. So in other words, I do think he will get the 2017 tax cuts renewed, extended. That is his signature legislation, and he did win a pretty profound democratic victory. I mean, he has a mandate. However, he's going to have to pay for part of it. And so instead of 5 to 10 to 15 trillion dollar expansion of the deficit, investors are going to realize that we're going to get like a 2 or 3. That's a significant difference in sort of the contribution of government spending to growth. And right now, if you look at the performance of US assets, particularly the dollar, they're bidding further profligacy, further fiscal stimulus. The other thing that's happening is that the Fed expectation of Fed rate cuts have been completely taken out of the market, except for one in October. And I think that growth will not surprise to the upside. I think the growth will surprise to the downside. And so the Fed will end up having to cut more than once in 2025.
You said more than once, but how much would be 2 or 3 or more than that also? And what is your assessment on bond yield?
Yeah, so I don't want to guess how many. I think saying that there's going to be more than once is more than enough for investors to realize that the dollar is probably too strong, and that the 10-year yield probably has more upside, but eventually it will peak and start coming down. So I think that, and also, labor data has been very strong. However, labor data is basically a coincident indicator. Labor data would be like trying to predict tomorrow's weather by looking outside your window. It's not very useful. And so I do think that looking forward, what I'm looking at is less fiscal support for the economy. And the fact that bond yields have risen today that will hurt growth over the next 2 quarters and expectations of growth. So yes, I do think the Fed will cut more. Now, does that mean that I expect a recession? I'm open to that possibility, but I'm not in the recession camp, at least not yet. And so I think that the Fed will cut more because it will face, lower inflation and lower growth, but not necessarily cut so much that it's a panic-induced cutting cycle that we would be familiar with in a recession.
Right. The other thing I wanted to also talk about is, post-Trump winning elections, the dollar index that's shot up about almost 6%. Where do you see it heading from here, and the kind of impact that it's having already on emerging market currencies?
So I think the dollar has more upside. And one of the reasons is that I think that in the short term, over the next 3 months, most investors do expect fiscal policy to be very stimulative, and they expect tariffs. And I think that there will even be a surprise on the tariffs. We'll have higher tariffs than even what most expect. So it's dangerous to try to catch the top in the dollar. Dollar also is famously a momentum currency. It takes a lot to kind of slow it down. So because of that, I think for the next 3 months, there's still more upside to the dollar. But then at some point in Q2, I think that investors will realize that their expectations of US growth outperformance relative to the rest of the world is built on a house of cards that stands on fiscal policy that will be significantly different. And then finally, I think they will realize that the tariff expectations are going to basically abate as we realize that President Trump is okay cutting deals on trade. Those two things will combine to give us relief, but probably in the back end of 2025. So Q1, more upside to the dollar. Q2, maybe some relief. Q3, Q4, a lot more relief. And I think we will end the year at a lower level on the DXY than we are today.
Right. So, Marco, what could be the level for the DXY till about your end? Where is it that you see it settling?
I mean, I think it's very difficult to forecast that. I think the DXY is going to come down. I think given that there's more upside, maybe 110, 111, it's difficult to see it dip below 100 in 1 year. That would mean more than a 10% decline in 12 months. So I would say probably somewhere between 100 and 105 by the end of the year.
Okay, 100 and 105, so at least a bit of a cool off from the levels of 110 that we have seen recently. But what's the expectation on crude? Because while on one hand the supply side issues are abating a bit, especially with the Middle East tension simmering off, what's the demand side looking like? Because that's been the worrying point. So given this, what's the outlook on crude?
On oil, the outlook on oil is, I think in the near term, again, very similar to everything else I'm saying. In the near term, there's more upside, there's more volatility, there's more risk, both because of the sanctions that have been imposed in Russia, but also because US is highly likely to be very aggressive in its negotiations with Iran over its nuclear program. And so investors should expect more serious geopolitical volatility in the near term.
Relationship change once Donald Trump takes over? I mean, how do you see the India equation changing? There is Donald Trump, there is Elon Musk. How do you see this entire equation moving?
I think that relationship with India, US and India is going to be very good. I'm not sure that Elon Musk is going to have anything to do with it. I think that for India going forward, a far more important relationship for India is its relationship with China, not really with the US. And that's because if India is going to boost its manufacturing, it's not going to be Elon Musk or Apple that helps India transition towards a more of a manufacturing economy. India is not going to be building Teslas and iPhones, and I actually think that our emphasis on the Apple supply chain in India is a mistake. For India to truly become a more of a manufacturing powerhouse, it needs to start with lower value added manufacturing. And the only country in the planet that can really help India with that is ironically China, which is a geopolitical rival. And so the far more important for India is what happens over the next 2 to 3 years with the sort of border dispute resolution process that was started last year between China and India. I think that could be far more relevant for India's development than anything that can happen on the Trump side. Now, President Trump he has a great relationship with Prime Minister Modi, so there's nothing wrong that's going to happen. I just think that that's something that India already has in the back pocket. It's a good relationship. It's a strong one. I don't expect it to be a problem. The real alpha, the real change in terms of performance of Indian economy would come if it were to improve its relationship with China significantly.
Right. In October, Marco, you made a call that, sell India and buy China. Are you buying India now?
I think I'm waiting to see what happens with the dollar. The dollar is going to be a very important trigger for emerging markets and assets. And so once the dollar peaks, I definitely would be buying India. However, within emerging markets, I'm not necessarily thrilled with Indian assets because they are so expensive. So I think that there's going to be more upside to some of the cheaper markets. It doesn't mean that you're selling India necessarily. It just means that you're overweighting, China and also Latin America, given that I'm quite bullish on commodities going forward.
Marco, on that note, we let you go. Really appreciate you making time and speaking with us today.
If you like this video, then like, share and subscribe to ET Now.